Hello everyone, welcome to my channel. Today we'll be going through 5 versus 13 EMA strategy. Please go through my disclaimer section. EMA, exponential moving average. It's a type of moving average which places greater importance to the last data and less important to the initial data. Where this can be applied? This strategy can be applied to different time frame, right from 1 minute, 5 minutes up to 1 week, and result varies. Now, who can use it? For different people, there are different purpose. For day trader, they use 1 minute, 5 minute and 15 minute candles. If you are a positional trader, then you use 15 minute, 1 hour candle with the help of 4 hour candles. And if somebody is an investor, he may use it a daily chart along with the weekly chart. EMA 5 versus 13 strategy. What are the advantages? It's an improved version of 5 versus 13 SMA, simple moving average strategy, and it gives quick return in the trending market as EMA picks the price movement faster than SMA. What is the buy or entry criteria? As EMA 5 crosses EMA 13 on upside, then we buy into near to the 5 EMA line. Sell or exit criteria: as EMA 5 crosses EMA 13 on downside, then we try to exit near to 5 EMA line. Drawback of this strategy: the drawback of this strategy, it's a lagging. EMA is a lagging indicator. If you're looking for 5 and 13 EMA, so we are already analyzing something that is a 13-day old. So yeah, the effect is like we might lose initially 10 to 15% movement of a share or of a particular instrument that we are trying to analyze. Second drawback is it does not give a good result in the choppy market. So let's take our first example of Nifty. It's on the daily chart and it's our long-term setup. Our green bold arrow are representing the buy signal where 5 EMA have crossed the 13 EMA on upside, and the red bold arrow representing the sell signal where 5 EMA have crossed 13 EMA on downside. So as the clear from the example where my mouse is, you see, except the first one, second, third and fourth, there are 3 sell signal and each of the sell signal have given good return. First one, I think the sell signal formation happened somewhere around 18,000, and Nifty came after that well below 16,800. So around 1,200 point or at least 1,000 point of return on on the downside. We see a second sell signal that formed around I think 17,400, and after that Nifty came down till 16,400, another 800 to 1,000 point gain, and one more in here. Same way, if we look on the buy side, the buy formation, first buy formation happened here around where my mouse is, around 17,200, and after that the Nifty went to 18,400. So 1,200 pound, roughly a 1,000 point plus gain, and then the second one. Next we'll look into Bank Nifty. And the second one here also, if you look into the Nifty, at somewhere around 16,600 the buy formation happened and is still continuing. Now we look into the Bank Nifty chart, daily chart of the Bank Nifty, and clearly there are three times sell signal happen, and all 3 have given a very good return. I don't need to read again full details, but if you see the first one where we have a sell signal around 39,500, and from where the Bank Nifty came up to 35,700, so roughly a 4,000 point on the selling side. Same way this looks like around 1,500 point, and this one again looks like sell around 38,000, and it came down all the way till 32,500. So almost a 5,000% point on the losing side on the Bank Nifty. Same way we see the gains also. We'll take another example of Tata LXI on daily chart. three buy signal. Each buy signal have given more than 10 to 20% return. Here the return is from 6,700 to all the way till 9,000, so roughly 30-35% return. Same way on the sell side, good enough return on the both the sell side. Now we'll look into the positional setup or the hourly chart setup. So now we are into 60-minute or 1 hour chart, and the first share we are talking about is Bajaj Finance. So we'll see there is a sell signal here and the Bajaj Finance with a red candle, a red arrow suggesting the same. Somewhere around 6,900 or 6,800. From there the share came down all the way till 6,000. So almost a 900 point gain, which is around a 15% gain on the losing side, sell side from the selling position, which is a very good gain. Now we look at buying position. We have a first buy candle here, and then from which is around 6,300, and the share went up to 6,700, and it continued its rally till the first sell signal, which came around 6,800. So something around 6,200 to 6,800, nearly 600 point plus gain, which is a very good gain if you consider positionally for 10% gains. And there are some choppy signal. Of course, market will be sideways and there will be time when will not make much money. So the choppy market, we should learn to see how we find the choppy signals or the fake signal and try to avoid them. Now we have another example on the daily hourly chart of Tata LXI. We have a 3 buy signal I think in last 1 month, and all have given a very good return. Last one have given a very good return from 7,200 till all the way till 9,000. So yeah, it's very explicit that it is working very well. And we'll take one more example of HDFC Bank. Not able to see where this sell signal formation happened, but somewhere from the top on top of 1500, and from where the share came all the way till 1300, below 1300. And here we have a first buy formation at 1327 or 1330 level, and the share way all the way till 1520. So roughly a 200 point gain, nearly 15% plus gain in HDFC Bank on a hourly chart, which is very good gain as a positional. You see a short call here. This is a sorting position around 1480, and the share came all the way till 1400, almost a 1780 point gain on the short side, which is more than 5-6% gain, which is a very good gain. Okay, so that's all. And before we wind up, I'll take a quotation from Warren Buffett. It's about taking risk, and it says, never test the depth of the river with both the feet, and it simply means don't take uncalculated risk. So many times what happens, we are a trader and we don't know how much is our risk appetite, and we take a heavy risk. Like we may have a 2 lakhs rupees, then we take a risk of 50,000 rupees. That's a lot of risk if you're taking a 50,000 rupees risk on 2 lakhs, because if you lose, you are losing 25% of your capital, and that's lot of money to recover back. So we should not take those kind of risk. I think that's all from my side on this video. Thank you guys.